The dark pool streak continues. This is over 2 weeks and counting where we've had at least over 1 billion in terms of signature dark pool prints each day. You can see here on Friday, 394.80, we had $2.5 billion worth of premium, and just throughout the week, if you literally click any day, you'll see it has been over 1 billion in premium. This one was 1.4 billion back on November 8th. And what's interesting about that is if we go to SPY's chart here, you can see the overwhelming majority of these prints came between the range of 379 to 389. Now there has been a few extra ones like in the low 390s that happened later at the end of this past week. However, the majority of them are within this range, which means this is showing us bullish emphasis right now because we are above this range. Now before, when we broke below and retested it and continued a lot lower, this was a form of bearish emphasis as long as we were before. However, CPI changed things drastically. It seems like institutions were trying to load or potentially even knew what that CPI print would be because they were loading within this range, which we ended up squeezing way above after. And not only did we have 2 daily closes above, we also had the weekly close above, and it wasn't just any weekly, it was a very strong weekly candle, which is very likely we see even more upside at least some point within this week. Now, if we have an initial pullback early in the week, it still will probably see a new higher high above this weekly candle. As you've seen in the past, this typically is the case when you have large green weekly candles like back here, the week of July 25th. We saw a very similar candle that had some follow through the following week, and then after that continued a lot higher. So I expect something similar to that degree, and that will likely lead to a retest of this orange line here. And if you've been subscribed to this channel for a while, you will know that this orange line is the one that connects to the 2009 lows throughout the bear market that we had back here. So this one, if you connect it to all of the major supports and resistances as we've had this major bull run ever since then, you can see that it does converge with a very critical level which we are nearing. We're pretty close right now, and I expect this one to get hit fairly soon, and this will act initially as a resistance level and a hard one at that. So if you are bullish, you are going to want to see clearance above this level, which right now is roughly sitting at around 402 to 403. So if you do get above that, that will give it some more leeway for further upside. Additionally, I'd like to mention we closed right on a critical trend line for QQQ. This one started all the way at the end of December before this big market began. And you can see here we've had key rejections like back here in the end of March, early April, also over here at the beginning of August, and additionally in early September. This has had a rejection every single time. We had one fake out actually in the middle of August up here, but that was rejected to go back below it. And other than that, though, it has been rejected every time throughout this year, and we closed right on this level. So in the future, if we do get above this level, especially a daily close kind of similar to what happened back here on August 10th, if we do get above, this will leave some more upside for tech, especially because this would be a form of a breakout. Now, could it be a fake out like we had back here in middle of August? Yes, you do have to be careful of that. However, a daily close above this level will likely have some more confirmation for at least a little bit more upside, similar to what happened back here. Something else notable, as I like to look through all the different indexes, you can see here the Dow Jones had a breakout last week, and this is a pretty clean breakout. The Dow Jones has been relatively strong in comparison to the rest of the market. For example, SPX, IWM, especially tech, has been a lot weaker compared to those other indices. But the Dow Jones here had a very clean breakout above this trend line over here. So this is bullish for the near term, which could lead to some more upside in the rest of the market because of how substantial this breakout was of this trend line over here. So I'm going to continue to watch this, especially as long as we keep a weekly candle above this level over here for this trend line. And this is kind of a rough range on the Dow. One could argue as well that there is another line right here based on the previous resistance over there. So I would leave this as a range in a sense, but we did close the weekly above. So it is fairly bullish that we were able to close above. And part of the reason why, or at least the main reason why, we have seen a lot of strength in the Dow and also somewhat in the market is because of this rejection on DXY. And if you remember in previous videos from the past couple weeks, I've mentioned how I was looking, especially on the daily chart, for the retest of this critical trend line that started all the way back on August 11th. We had the retest over here real time on November 3rd, and after it retested, it got rejected very hard the day following. after that, it had some follow through. It had a little bit of consolidation here near like a double bottom formation, but then got hammered after CPI and continued a lot further down. This has led to not only a lot of downside for the dollar here, but it has led to a lot more upside because remember, it is a bit inverse in the market. It has led to a lot of upside in equities, so that has fueled this rally on top of the fact that there was a major short squeeze since there was 1.3 on the put to call ratio earlier last week, which is just very, very high. That was the highest since 2008. So no surprise in a sense that we have been seeing this short squeeze happen so far. And the put to call ratio did go down substantially in the past couple of days. So we may see some form of a pullback in the general market to start the week off just because of that. So things can even out. But for the most part, though, DXY looking fairly bearish and probably will have some form of continuation later on this week, which will lead to a little bit more, at least help the market in terms of catching a bid. And I do want to talk about the VIX here because if you remember 2 weeks ago, you can see this weekly candle here, we had a retest of the pennant and then we bounced a little bit off of it. However, last week we saw follow through for a breakdown of this pennant. And as long as we stay below this pennant, it is subject to some more, at least chop, but also potential downside because we broke down for this pennant formation, which is not bullish at all. And I'd highly encourage you to look for in the future, if we did have some form of a break back into the pennant, that would leave for some more upside on the VIX. But as of now, as long as it stays below, that is not the best for the market in terms of downside. So if you are a bear, you are going to want to see confirmation back into this pennant at the bare minimum for some more extended downside, because otherwise you are going to see this continue to fall down or at least chop. As we saw back here, it did chop for a little bit below before gapping back up above like I'm looking for right here in terms of confirmation, which led to a lot more downside in the general market. Something that I noticed from this past week that I wanted to bring to your attention was a breakout in gold. So you can see here, and by the way, I typically don't talk about gold, but I thought this would be interesting to analyze because it still applies to technical analysis principles. As you can see here, we made a high back around, or at least close to the high back around the beginning of March, and then it's been in a downward trend ever since. However, this week we closed very decisively above this downward trend. You can see here we had a breakout over here, especially on this day of November 4th. We had 2 days where we retested the breakout level and then it continued a lot higher. So as of now, this is fairly bullish for gold especially, and we did see some supplemental call flow, at least in leaps for the 2024 expiration mainly. These were fairly decent sized orders, especially the 3.2 million one, and these were quite a bit out the money, at least for the 200 strikes. So I have monitored these orders, but it's interesting to see this type of breakout in gold because of the fact that it had been in a downtrend for so long. So I'm going to continue to watch this, but as of now, this is a failed cup and handle, at least an 11-year cup and handle that started all the way back in 2011. You can see here the cup, and then we formed the handle, but then it had a rejection off of that. So as of now, it did break out in the short term. It probably will have a little bit more upside, but it probably will not resume at least its extreme bullish macro trend unless we're able to clear this double top up here that we formed around roughly 2,100. And since I looked through all the other major indexes, I'm going to look at IWM here, and basically we did have this rejection, or at least initial rejection off the yellow trend line here that started again here at the beginning of this bear market, but this was back in November since we were seeing more relative weakness before the general market like SPY and QQQ started to fall off. We saw this rejection up here for a fake breakout of this previous consolidation back in 2021, and then we had our first rejection over here for this trend line, and now we got a rejection to close out last week below here. So again, in terms of QQQ and IWM, we still are below our critical trend lines, and if we do get above them, it's going to lead to some more upside, especially for SPX, because this will aid the general market overall. But other than that, though, appreciate you guys watching this video today. Make sure to look at all of these levels throughout the week, and I will see you guys next time.